how to manage loan and mortgage payments post-divorce. Hi, I'm Tim Blankenship with Divorce661.com. One of the biggest financial challenges after divorce is figuring out who's responsible for loan and mortgage payments and how to make sure they're handled properly. Whether you're keeping the house, moving out, or splitting other debts, let's walk through how to manage these payments post-divorce and avoid problems down the road. First, make sure your divorce judgment clearly states who's responsible for each loan. Just because the court assigns a debt to one spouse doesn't mean the lender removes the other spouse from the obligation. If your name is on the loan, you're still legally responsible in the eyes of the bank unless it's refinanced. That's why refinancing is a key step. If one spouse is keeping the house, the cleanest solution is for them to refinance the mortgage into their own name, removing the other spouse and releasing them from financial liability. This applies to car loans and personal loans as well. We worked with a client who thought their ex was handling the mortgage after the divorce. But when payments were missed, it affected both their credit scores because the loan was still in both names. We helped them file an enforcement motion and eventually work toward a refinance to clean up the situation. At Divorce 661, we help clients structure their settlement agreements with clear refinance timelines, equity buyouts, and what happens if a refinance isn't completed. We also make sure you understand what steps need to be taken after the court signs off. If refinancing isn't an option, you may need to sell the home and divide the proceeds. In that case, make sure the judgment outlines who pays the mortgage until the sale, how profits and costs are split, and who's responsible for listing and closing duties. If you've finalized your divorce and still need to resolve how loans and mortgage payments are handled, visit Divorce661.com for a free consultation. We'll help you tie up these loose ends, protect your credit, and make sure your financial obligations are crystal clear.